Hey, good morning everyone. I'll be taking you through price action analysis of Bank Nifty futures using 1 minute candlestick chart, and in that we'll be going through every single bar, what it is telling you and the story that is unfolding and how you can utilize this to come out with possible trades and profit from them. Right now, this is simple price action analysis, no indicators being used here at all. What I'm relying on is just bar by bar analysis, and then some trend lines and trend channel lines and some other price action principles that we'll go through in this video. Okay, so let's start. It's a gap up day. You can see that this line here is yesterday's high. So price gapped up above that level. So clearly bulls winning at least for a while, right? And this is a very good strong close above yesterday's high, close at the high of the bar. So definitely bulls winning on this bar. We don't do anything at this point of time. Bar 2, there's a continuation of bar 1's up move that has been established here, and the bar closes decently. There's a tail at the top of this bar, so possibly some bears scaled in. Those who sold here expecting the price to fall down, or they created the pressure but they were not successful, at least on bar 1 they are scaling in here, right? This is days open, that is this line that I have marked here, right? So 2 bars of up move is what we got. What you see here is the moment this bar 2 closed, right? What do you think of the price action? Bulls are winning at this point of time, but I don't see any specific setups here that you want to take trade on. Bar 3 immediately on open, bears sold the close of bar 2 and they pushed the price down below bar 1's low, days open. All those important points were covered and bar close almost at its low, right? So bear strength for sure. And then bar 4, there is a follow through, not a strong looking one, but decent one, right? And it closed bearish, so possibility of a follow through, we don't know for sure, but we're considering this as a follow through because it is not a strong failure as well with a strong looking bullish bar. Yes, bar 5 is a strong looking bull bar, and there's an attempt by bulls to make this bear breakout fail below bar 1's low, right? And possible support coming in this area. But what do we see here in terms of price action is there is a bear bar, strong bear bar, negating all of the bullishness that has been established here, at least for now, right? From a context perspective, yes, there's a big gap up and we're still above yesterday's high, right? So there is a bullish bias, certain bullish bias. But what we are betting on is what you see, not what you think, right? You clearly see bears winning in this zone, and then we have to look out for further more clues. Like if this is a trend, although it is not a convincing one, but at least the bulls have been knocked off for a while, and you see this, but it is not a failure yet, right? What you see next is bar, which is weak looking, right? Some bears sold below this bar as well, so some of course scaled in this zone, and it tested the low of bar 2, which is where the bear breakout happened, right? It fell short by few points at least, right? So bulls are not that strong. If they were, they would have covered the ground, right? There's no follow through at all, just a single bull bar, and they are not able to get a follow through, right? Even though this is a weak looking bearish bar, still a bearish bar, and you're looking at context and location, right? Context is that bears have knocked off these bulls at least for a while, and there's a weak follow through or weak response by bulls. There is a breakout test, right? This bar tested this bar's low, and that means bulls are not that strong. So what is it telling you is this is a possible breakout test, which means a pullback, and hence we can bet on short trade, which is what we take here below this bar's low, right? And you can see that it was a strong bearish bar, although from the distance perspective didn't go much, but there was a follow through. Now this is around 1951 3 or 4 zone, right? That's where you entered, and that is uh, a 1:4 risk as to reward trade at least, right? And you could get out here in this bar because this is one push, second push, and third push. I usually try to get out when a price is making a third attempt to go in a certain direction, right? Now, how do I consider these three count? Now, it will take some practice for you to understand, but based on the videos I have posted in the past, it shouldn't be that difficult, right? What am I considering here is attempts, right? This is the first attempt. Even though this is a bullish bar, definitely there were some peers who tried to push it down. They were not successful. That's a different story. Second and third, go with your eye, right? Ultimately, that's what matters. The moment I saw this, I drew this line and then I drew parallel, right? So let's assume that you got out of this short on this bar or maybe on this bar. Definitely, it was coming closer to yesterday's high, which was going to be an important support level, right? I drew this line here, which is the highest close, which means the bar closed at this point of time, and after that it did not exit. The price did not exit this level, right? What you see here next is a strong looking bull bar here, right, which is closed decently, of course, and then there is a weak attempt by the bears, right? And immediately when I see the latest close, high or low, I draw a line and I keep adjusting it based on the further price movement. And then I drew this line. What you see next is there's a weak response by bears, and bulls were able to cover the ground, and they managed to create this good looking bar. Now this is a failure here, and then the bears who sold the close of this bar, they try to scale in, and they try to push. Some bears have given up, some might not have yet. So this is the first attempt wherein bears are kind of trapped. Then you see these two bars, good follow through, right? 1 2 3 bars bullish, and then you see this. Now this is a strong looking bear bar. Those who sold in here, they're going to scale above this bar's high, right? That's what happened here. But look at these tails here, right? This is right at the channel, sorry, the trend line, right? And you see tails on these two bars, bottom tails, which means these bears are not strong here, which is a clue being dropped. You have to read these signals very carefully, and you do not need anything else to understand price action and take trades. Then there is an attempt by bears, last one, right? This is a strong bearish bar, but the context and the location matters. The move already started here. They were weak, at least on these two bars. And then you see this bar, right? So it's kind of a trap, other trap, wherein this is not looking good for bears, right? This is late. It should have been a strong bearish bar setup here, right? Plus, we have a context wherein these bulls definitely had a decent follow through after give up by bears here, first attempt, and this is the second attempt that you see here, because immediately the bulls bought the close of this bar, very little tail here, and a strong looking bullish bar emerges, right? And it closes right above this pivot high and closes strong near its high. That definitely means the first attempt, some bears were able to get out. Those who did not get out, based on when they if they sold here the close of this strong bearish bar, they try to get out here, and they couldn't even get the break even exit, which means they are going to be trapped. And after this bar close, that is almost certain. That's why you see this kind of a move, fast, big move, right? These are almost always coming out of the trap setup. That's one of my favorite setups, right? So what happened here next is, the moment you see this, you have to anticipate these setups, okay? If you're waiting for this to appear and then you will decide, I want to take this trade, let me understand what happened. No, the moment you see this kind of a price action, the first attempt failed, you have to anticipate there may be a possibility of second attempt failure. Of course, that will be against the trend because by now it is a bear trend, at least after looking at these bars. Of course, there's a gap up and it is still being held above yesterday's high, so we could look at the bullish bias as well. But from the point of view of context, first bear attempt failed, second is failing. If the bears were so strong, you would have seen a follow through. This is clearly a weak looking scale-in. The bears, if they were strong, the scale-in would have been strong and they would have definitely gotten out at break even and could have possibly pushed through yesterday's high and continued further down. But that did not happen, which means bulls were stronger. They used this trap opportunity, and that's why you see this rocket-like movement. It just emerged completely. Highest close by then was also exceeded, and you see a move based on this bar's high, which is where you go long about 19518 point something, or you get, let's assume 519, and definitely it went 100 points. Now you decide whether you want to get 20 points, 1:2, 1:3, 1:4, or 1:10, depending upon your profit booking mechanism. Okay, so that's how you use price action analysis to come out with possible trades and profit from them. There's nothing else needed. That's it. Thank you for watching.